We all know that private equity has a limited life in terms of investment. I always say that when private equity makes an investment, they first write on their forehead, for sale at my price. I mean, RBI's early warning in terms of what was happening in the whole unsecured space in NBFC, we can take it as a pain, it is, but if you evaluate it from the perspective of global investors who are sitting far away and trying to make the decisions of investing in India, it all says that India is growing but cautious. Markets will keep going up and markets will keep going down. But I think what's really heartening is that capital is pouring into India from all directions. Excessive demand and not adequate supply is today resulting in India becoming an expensive market. There's no debate. Look at it from any standard, India is no longer a cheap market. I feel blessed that I was born in a generation where I saw Deepak Parekh build multiple, multi-billion-dollar financial service businesses. And then I saw an entrepreneur called Uday Kotak, who kind of started with an NBFC and who's built a world-class banking institution. And the lessons are very simple. You just have to follow what they did right.
Hello and welcome to Market Café. I'm your host, Surabhi Upadhyay. The Indian economy and the Indian markets are on a roll. It's a near one-way rally for the past 3 years since COVID. So I thought it's a good time to get some perspective from someone who does a lot more than just watch stocks go up and down. My guest on today's episode is someone who's a veteran of the Indian banking and financial services landscape. He's literally done it all, from tax advisory to corporate M&A to deals in the capital markets to private equity to looking at setting up his own NBFC. Literally, he has done it all. So I'm really looking forward to this conversation for some big picture perspective. Let me go and introduce you to Ashok Wadhwa, Group CEO at Ambit Private. Thank you so much for taking out the time and for agreeing to do this, Ashok. It's not easy to catch Ashok. I know we managed to do that like only once in the year around budget time. But that's why we thought we'd gate crash your party. It's a fabulous space that you have here at Ambit. So thank you for having us over.
No, thank you. Thank you, Surabhi. For a few years now, I've been a little kind of low-key. And I'm certainly delighted that you'll invite me each year at the budget event. It's a pleasure to be there. And it's a pleasure to be here with you today and welcome to our office.
Thank you so much. So Market Café typically is all about going to the cafe and not doing office conversations. But when you have an office as grand as this, the cafe comes to the office. So it's brilliant. We couldn't have asked for more. So thank you so much. So coffee is yours and the cups are ours. That's how it is.
All right. All right.
So thank you very much. Thank you. You have the 35,000, feet above sea level kind of a view on the economy, on what investors are saying, what foreign sort of investors are saying, what's happening in the deal space. And when we look around and we hear the narrative, markets at all-time highs, economy is booming, retail investors in the market, it seems like a perfect Goldilocks scenario. But that's when I wonder, is it all too good to be true or is it real?
That's a $1 million question. It's a question that I get asked literally each time I'm traveling. I'm back from a long trip both in Japan and Korea. And I can tell you the quality and the quantity of interest that I saw in terms of both strategic as well as financial investors wanting to invest in this country. I mean, it's unheard of. I have not in many years of my travels and trying to talk about India experienced that before. For me, here is how I would say it. It's real. I think the economic progress that this country has made, the geopolitical relationships that we have created, the economic environment we have created, political stability that we have created, all augurs extremely well and defines what I would think is a glorious future for India. Having said that, I have to tell you, each time we talk about this, a typical investor will ask me, but isn't India capable of self-inflicting damage? And it's a perennial question. The questioning has become lighter. People are less emphatic about it now. With every passing year, there is continuous and growing belief that this time around, India is going to certainly deliver on the promise of many years that the economic growth in this country is going to surpass any other country and that we are probably now moving towards our originally defined destination of becoming a truly global economic powerhouse.
I guess the markets are really reflecting a lot of that optimism, right? And in some sense, at least the listed capital markets have also evolved because post-COVID, there's so much of Indian money that's come in. It's no longer just a foreign investor-driven story. What do you make of that?
I think it's true. If you look at the number of companies that have come with public offerings over the last 3 years, if you look at the governance in those companies, if you look at the quality of accounting in those companies, I think there is growing belief to say that the economic growth of India is actually translating into better quality companies, better corporates, better governance. And I have to say that sometimes we don't give enough credit to our 3 big regulators, the financial service regulators, SEBI, RBI, and IRDA. I think the reform process that they have undertaken, the transparency that they have brought in, the early warning signals that they have created, all of them actually adds a lot to the definition of why India now and going forward is likely to be a very, very successful economy.
And they're as busy as ever. They're telling us whether it's SEBI with the way the mutual funds are attracting small cap flows, or whether it's RBI looking at compliances within several entities. I guess the regulators are very, very active, right?
Yeah, they are active. Sometimes we feel that they are intervening too much. But that's the cost that you have to pay if you truly want to be recognized and respected as a well-governed economy, not just a growing economy, but a well-governed economy. I mean, RBI's early warning in terms of what was happening in the whole unsecured space in NBFC, we can take it as a pain. It is. As people running an NBFC, sometimes it's a little painful. But if you think about it and examine it in some detail, if you evaluate it from the perspective of global investors who are sitting far away and trying to make the decisions of investing in India, it all says that India is growing but cautious, and that there is a framework out there which is going to ensure that hopefully, unless a black swan event happens, we don't trip again.
So speaking of foreign investors and domestic investors, I want to understand from your perspective, and you've been looking at these markets for over 3 decades now. Has the texture and the fabric of the market changed post-COVID because of the color of money that's coming in? There's foreign money, yes, but there's a lot of domestic money coming in, and it's been a one-way rally, literally, for a lot of new investors. So do you think this is a permanent change? How do you see it evolving? And does it concern you that it has literally been a one-way rally for 3 years now?
I mean, as a market participant, who's seen markets move up and then suddenly also drop down. And let's not forget, it also happened very recently. 18 months ago, we saw a bit of a bearish tendency coming into the market. Markets will keep going up and markets will keep going down. But I think what's really heartening is that capital is pouring into India from all directions. Global strategics, domestic strategics, global institutional investors, domestic institutional investors, domestic retail. I think everybody is attracted towards what people see as a very bright economic future, which of course gets translated into a very interesting and attractive market proposition. Very interestingly, I'll tell you, I was in Korea just 4 days ago, and I was having dinner with a Frenchman who lives in Korea and who's made Korea his house. And he was asking me, he says, there is a large asset management company that is trying to sell an India product. Do you think India is as attractive as we see it from here? And I asked him, I said, what do you think? And he said, to me, it looks like the best market. And I said, then go ahead and make the investment. And so I'm saying this is a retail investor sitting in Korea of French origin who's attracted to the Indian market. So why would we think that Indian investors should not be coming to the Indian market in greater numbers?
But I hate to, try and sound like a bear, but I'm just trying to play devil's advocate. Could that itself become the next problem for the market? The fact that there is so much money chasing Indian stocks, what do you think about the supply and demand dynamics there? And therefore the questions about, eventually are we seeing a bubble, etc.
So here is how I would say, clearly excessive demand and not adequate supply is today resulting in India becoming an expensive market. There's no debate. Look at it from any standard. India is no longer a cheap market. Indian valuations are highly competitive and, if anything, expensive at this point of time. And that, as I said, is purely because the supply is not still matching up to the demand. But what it also says is there is room for many, many more companies to list their stock on the Indian market.
Right.
As that supply moves up, hopefully, it will kind of bring prices to a little more real level. It doesn't mean that the market will move downwards, but what it will certainly means is that many more companies will be absorbing this liquidity and capital that is flowing into the market. I think what gives me most comfort, as I said, is two things. One, over the years, India has learned that good governance and good management are key to long-term success. Today, I'm heartened by seeing the number of good quality companies that are reaching out to the market. I have never seen that before. And I think the second thing which is very comforting for me is that the regulators have become quite vigilant in their surveillance. To me, that's important because willy-nilly, when the market is in this positive frame of mind, there will be some errant individuals or companies that will want to take advantage of this bull market. And there, the fact that the regulator is so aware and so vigilant about it, perhaps provides the comfort that going forward, we may not be tripping on exactly the same issues that tripped us in the past.
Let me dial back to a point that we were discussing earlier, and I think the two are related. The question of supply and demand in the market, if there's enough stock available in the Indian listed markets for all these investors to kind of pile on. Now, what we've also seen are a lot of exits by MNCs, by early stage venture capital funds, private equity investors, who are basically cashing in on good investments made earlier. Now, as they go out, I don't know whether these tax amendments have anything to do with, the timing has anything to do with the fact that there's a lot of the block deal activity in the market, your sense on that, and then your sense on these sales themselves. Typically, when influential investors sell, it's seen as a red flag. So, should we be worried at all?
So the first question, Surabhi, I don't think that there is any connect between block deals and activity in the market and the change in legislation or this new preamble being signed. I think preamble is only introducing a very well accepted and very well settled position under bilateral arrangements as pronounced by OECD way back.
Right.
So I would say that it has no connect with anything that's happening in the market at this point of time, purely coincidental. On your second question of how do I read into large financial investors or private equity investors or sometimes even promoters wanting to sell.
Exactly. MNC promoters, when BAT choosing to exit a part of its stake in ITC, and so many other such deals have happened.
Let's go back to the fact first as to why people get their companies listed. One of the reasons you get your company listed is because you want liquidity. You want ability to bring in new investors and you want ability for existing investors to be able to go out. We all know that private equity has a limited life in terms of investment. I always say that when private equity makes an investment, they first write on their forehead, for sale at my price. And by that definition, everybody knows that they are looking for an exit at some point of time. I would argue that a mature market creates an environment for private equity to be able to recycle their capital because their ability to be able to exit is really the basis for them to make larger investments.
Right.
I think Indian market today offering these private equity funds an opportunity to exit augurs extremely well for access to larger pools of capital for Indian entrepreneurs going forward. So I would say if the market is today offering that liquidity opportunity, great from an Indian market perspective, great for private equity investors, and great for future of private equity investments in this country. As far as promoters are concerned, listen, some of them do it because they need to create more liquidity in the market. Everybody wants to see if there is larger pool of capital available, and we spoke about it a little earlier, that there are many more retail investors wanting to participate in a particular stock. I think it is incumbent upon the promoter to provide that liquidity so that there is greater activity in the stock of the company. So I think it's a very healthy situation. I wouldn't worry about it or read anything beyond the fact that this is Indian market getting to a new level of maturity.
Okay, sounds good. And I completely, buy that argument. It makes perfect sense with the swift manner in which a lot of these deals have been executed. Okay, so let's come to the here and now. Because you know the entire landscape so well, a lot of viewers of this show are looking for ideas. And don't worry, I'm not asking you for stock tips, but, themes. where will the big money be made over the next, let's say, 3 years, or if I widen the horizon, even 5 years? What are those concepts or those ideas?
I think to me, the biggest theme that I resonate with at this point of time is the whole manufacturing theme.
Okay.
I think India's focus on manufacturing, albeit dictated by our own internal needs, because after all, how do we get so many people employed? How do we create employment opportunities for such a large population? So I would say it's been dictated by internal needs, but in a sense, blessed by perfect timing. The China Plus strategy, the disruption to supply chain, India's focus on manufacturing. And many people think that manufacturing was an idea that got created during COVID period because, well, there was some
supply chains were disrupted.
Were being disrupted at that point of time.
Yeah.
I'd like to draw your attention to the fact that our finance minister reduced the tax rate to manufacturing on new manufacturing companies to 15%.
Pre-COVID.
Much before COVID. So the focus and identification of manufacturing as an activity goes back to pre-COVID times. And I think that theme is playing out extremely well for India. I think India is going to become a serious hub for manufacturing. And I'm not trying to compare it with China. The scale in China is different, and I'm just coming back from there. I've seen what that scale is. But the world can certainly do with India as a very dominant part of that supply chain. So I would say anything to do with manufacturing, creating capacity is certainly a very positive, has a very positive future. I would also think that Indian technology companies are going to have to shift gears from being body shoppers, perhaps having missed the whole product development cycle. Now, as AI comes in and as new technologies get oriented and embedded in our businesses, I think Indian technology companies are going to play a very, very important role. So select Indian companies as they look at innovating and redefining themselves would, in my view, be a second large theme that I would certainly want to bet on.
Innovative IT companies, manufacturing, do you want to do a hat trick? Is there anything else? Anything?
Being from the BFSI industry, banks, financial services, insurance companies, I think I would bet at any point of time, given the demand in the marketplace, given how much more needs to get done, given how many more people are being included in the growth of this Indian economy, I think wealth management businesses, I think non-banking finance companies, I think insurance companies, I think all of them have an extremely bright future. They are more domestic in terms of both demand and supply, but I have no doubts that the future of those businesses is extremely, extremely positive.
Okay, that's fantastic. So manufacturing, IT companies that can leverage AI and the BFSI space. That brings me to the question of what's happening here at Ambit. I mean, you guys are right at the center of the action, and your partnership with the Japanese seems to be deepening, right? Because I think there was an equity partnership with Daiwa at the holding company level, and then there's some money that's been raised even for your NBFC. So what's going on?
Yeah. No, so listen, we're very fortunate. I think all of us in the investment banking stroke lending business have been immense beneficiaries of the economic environment in which we live today. Ambit has been a beneficiary exactly like many of my other peers have been beneficiaries. And it was appropriate time for us to say, how do we raise capital and how do we re-look at our future so that we have a strong competitive advantage in what can otherwise be a little crowded market. And we chose to bring in a strategic partner in Daiwa. Daiwa is a 125-year-old Japanese full-service investment bank, second most successful independent investment bank. They were very keen. They are looking at India from a very long-term perspective. The one good thing about Japanese, apart from the fact that there is so much marriage of cultures, is that their vision for any strategic decision is really a long-term vision. And that appealed to me very much. We found a great partnership in the leadership in Daiwa with the leadership at Ambit. And we thought it was worth converting it into an institutional relationship. So Daiwa first came and invested in our holding
parent
company,
company,
in
yeah.
our holding company, and they also merged their equities and their distribution business in India into our business. That process is waiting regulatory approvals. And then last week, we were able to successfully convince them that the Indian lending business, the whole non-banking finance company space, and that space has seen a lot of investment from Japanese. We saw Mizuho Bank invest in Credit Saison. We saw SMBC invest, before that. So the credit space in India has seen lots of interest and investment from Japanese. And we were able to convince Daiwa that they should also look at the Ambit non-banking finance company, which is growing very rapidly, which has grown well, 170 odd branches now. And listen, they were convinced, and we were so delighted that our strategic partnership is now extending itself.
Got it. So, Ashok, just coming to some last questions. Elections around the corner, and you've seen so many different cycles, political cycles. This time, the market sees it as maybe a non-event, expecting continuity. How do you see the next 5 years or the next round post this election?
I think continuity is perhaps an acceptable term, because that's what I think the world sees, that's how I see it. And I think it augurs well, because one of the pillars on which this Indian economy is thriving is political stability. And the fact that we've been able to create such strong relationships with some of our neighboring countries, many of our neighboring countries, I think is also playing an important role in that. I personally see the reform process from here probably accelerating. There are a few items which are unfinished on the agenda. For example, I see the whole divestment program of the government perhaps being accelerated. They haven't done that. They were off budget in the first term. But for NHAI and power transmission and raising those InvIT monies, they were perhaps a little off on the second term. I think you will see an acceleration and completion of that agenda for sure. I also see India actually leapfrogging with a sense of futuristic reforms. We heard about Elon Musk coming to India. Perhaps, augurs well for manufacturing sector. Maybe we will see Tesla cars being manufactured in India in the foreseeable future. I see large multinationals eventually settling down with the proposition that India is a phenomenal place to set up large manufacturing bases.
Yeah.
And I see you're reading about what Apple is doing in India, and as I said, Tesla is another great example. So I see the story that you have seen so far of economic growth, consistency in reform, political stability, hopefully thought-provoking ideas being accelerated and implemented going forward. And I hope it happens. I certainly see India getting to be the third largest economic power in the world in this period. I certainly see the $5 trillion number being breached in this period. And incidentally, if I just go by statistics, today Indian market is quoting at 1.25 times our economy. GDP is about 3.7. The market capitalization is about 4.25. We get to $5 trillion. We are at $6.5 trillion. So, there's a significant upside in the market from here, if you just look at that comparison overall. So I'm very optimistic about where India is and where India is going.
That's a great note to end on, the optimism and all the reasons that sort of you explained around it, and that seemed to be completely justifying it. Finally, I want to end with a bit of a personal question. You have been in this financial sector jungle for close to 4 decades, I guess now. You've seen so much change. What is an advice or maybe a tip you'd like to leave people with, both investors and also people who are sort of joining the financial services landscape, who are part of the professional sphere in India? Any advice or any tip for them?
I say this to my colleagues in the office, that I feel blessed that I was born in a generation where I saw Deepak Parekh build multiple multi-billion-dollar financial service businesses. And then I saw an entrepreneur called Uday Kotak, who kind of started with an NBFC and who's built a world-class banking institution. And, the lessons are very simple. You just have to follow what they did right. What did Deepak say? He says, financial services businesses cannot be built in the short term. Generally, no business can be built in the short term, but this business requires immense amount of discipline, immense amount of humility, but most important, ability to deny yourself greed. Greed and ego are the two big damaging pillars if you have any desire to build any business, but I would say certainly financial services business. And the second thing that we learned from Uday is, doesn't matter whether it's a professionally run company or a promoter run company, governance by inducting best-in-class board members, truly independent board members, and best-in-class management. Access to capital is overemphasized. I personally believe best-in-class governance and best-in-class management will have unlimited access to capital. So we put too much emphasis on access to capital. We should actually put access on governance and management. And I think if you follow these two philosophies, long-term, good governance, good management, I think it's a recipe for huge success in the future.
So that is advice going out to professionals, to entrepreneurs. Any word for investors out there who are looking to ride the great India growth story? What would you tell them?
Yeah, I mean, I would again say the same thing. You know, you can't choose the timing. So don't please try and time the market to be the best investor who made the greatest return. Define your own objectives. Define what your horizon is. And for God's sake, stick to your horizon. Just because somebody else made money faster than you or made more money than you did, doesn't mean that you're not a good investor. You're a perfectly good investor if your definition of what you wanted to do and the time frame in which you wanted to do it is achieved. And that would be my advice to the investors.
Coming from you, it is going to mean a whole lot to all our viewers who are going to be watching this conversation. Thank you very much, Ashok. It's been an absolute pleasure. Thank you for taking out the time for us today.
Thank you very much.
All right, folks, that's a wrap on this edition of Market Cafe. We will see you with another conversation soon. Thank you for watching CNBC TV 18 and do follow us on all our social media platforms for news, updates and more.